In this video, we will reveal the possible events that could happen in a few months and the importance of betting on Bitcoin. I ask you to concentrate as much as possible to understand what is coming. Bitcoin has fluctuated from 98,000 to 89,000 and then back to 95,000 in just 24 hours. This volatility is an inherent characteristic, not a problem. Investors experience extreme emotions, but those who can embrace this volatility have a great competitive advantage. Volatility is not a bug, it's a feature. Those who can embrace it have the advantage. Investors who have lived through this emotional roller coaster in just a few days have gone through the equivalent of 100 quarters of anxiety. However, if you don't sell, you are the beneficiary of what is happening. Volatility is a trait that can be leveraged. If you are a long-term investor, the correct way to think is that Bitcoin is for long-term capital preservation. If you have a capital portfolio that you do not need for 4 years or more, ideally for 10 years, then the portion of your capital that you set aside for 10 years should include Bitcoin. You should not invest in Bitcoin the capital you need for 4 days, 4 weeks, or 4 months. It is not a working capital asset. It would give you a heart attack. In 2024, the Securities and Exchange Commission, SEC, approved Bitcoin as the first digital asset in history as a commodity. In January 2025, mark-to-market accounting for Bitcoin became mandatory. This allowed financial institutions and banks worldwide to handle Bitcoin without restrictions. For 80 years, the situation was stagnant, where a corporation could have all its assets in real estate, gold, soybeans, oil, or treasury bonds. However, only treasury bonds seemed liquid and fungible, but they did not outperform the cost of capital. Then, Satoshi Nakamoto invented this new digital commodity, and it took 15 years for people to decide that it was not about bulbous tulips. It took a long time for the government to accept it, and in 2025, it was probably the first year in which it could reasonably be said that banks would handle Bitcoin, the government would not prohibit it, and it would truly be considered a commodity. If you are a CEO of a publicly traded company, you now have the opportunity to recapitalize your company on a BTC basis instead of a USD basis. This means that you can go from being negatively polarized to positively attractive capital. Wouldn't you like to walk into a meeting being attractive instead of repulsive? If your capital is returning more than the S&P 500, you are creating value for shareholders. How much capital can you raise if you say that you consistently return double the S&P 500? The answer is, how much money do you want to invest in me? But if you say that you consistently return less than the S&P 500, how much capital would you want to invest in me? The answer is none. You are magnetizing or repelling capital. Imagine you have 100 wealthy families from 47 different countries. All these families do not trust their banks, their governments, or their local currency. They are looking for a safe place to deposit their money. If God came and said that he would run the bank for them and issue a currency called God Coin with 21 million units and the ability to transfer them telepathically, all these families would put their money in God's bank and use God Coin as a store of value. However, God has not chosen to do that, so the best option is to hire a programmer to create a digital banking network. This is how Bitcoin emerged, a secure and decentralized network that does not require trusting any bank or government. To create this network, each family and each person in the family runs a version of the banking software. Each version of the software verifies the others, and anyone who tries to cheat is expelled from the network. In this way, a decentralized network is created that is stable and durable, even when no one trusts anyone. To secure this network, electrical energy is used to generate hashes, which are used to randomize transactions on the network. With thousands of trillions of hashes, no one knows who will build the next transaction block. But what we do know is that it is impossible to hack the system. There are 3 reasons why the price of Bitcoin goes up. First, because fiat currency is being weakened. If you live in a country like Lebanon, Venezuela, or Africa, where the currency collapses in 5 or 10 years, you obviously want Bitcoin. Second, because Bitcoin is digital. If you can move $1 trillion from New York to Tokyo and back every hour, every second, every millisecond, there is utility in that. The digital form of capital is valuable, even if you manage the country perfectly and there was no inflation. Third, because Bitcoin represents digital capital in cyberspace. If someone gives you $1 trillion and tells you to buy things in Russia, you can do it. If the Russian government operates perfectly and nothing deteriorates or ages, then it would be almost the same, but not digital. The point is that the passage of time continues. Governments do not function efficiently. There are hurricanes, fires. All this is entropy and chaos in the real world. Bitcoin is valuable because we escape the entropy and chaos of the real world. Bitcoin is valuable because it is 1,000,000 times faster, smarter, and cheaper because it is digital. Bitcoin is valuable because no one can weaken it. Volatility can be leveraged. If you are a long-term investor, the correct way to think is that Bitcoin is for long-term capital preservation. If you have a capital portfolio that you do not need for 4 years or more, ideally for 10 years, then the portion of your capital that you set aside for 10 years should include Bitcoin. You should not invest in Bitcoin the capital you need for 4 days, 4 weeks, or 4 months. It is not a working capital asset. It would give you a heart attack. Bitcoin is financially useful because it is the most valuable resource in the world. If you need 10 billion in credit on Saturday night to front-run the market, you can get it from the Bitcoin network. You cannot get it from your other assets. If you need to sell something for $1 trillion in 5 minutes, you can do it with Bitcoin. You cannot sell anything else on Sunday morning in 5 minutes. On the other hand, if you want to take a long position on Sunday morning after someone has taken a short position on Saturday night, you can do it with Bitcoin. You cannot do it with almost any other asset. Bitcoin has been going up 60% per year for the last 8 years. If it were a perfectly exponential increase with a beautiful curve that you drew with your artistic hand, then people stupider and richer than you would have all the money. If I tell you that Bitcoin will go up 60% per year, and if you do the work and understand why, you will understand the fundamental thermodynamic physical reason why capital flows from unsafe assets to safe assets. Why do you sell your Venezuelan currency and buy dollars? Was that random or is there a reason? If you understand the fundamental thermodynamic physical reason why capital flows from 20th century assets to 21st century assets, from physical to digital, from financial to digital, then the best thing that could happen is that Bitcoin appreciates volatility because everyone else will be scared and walk away from it. 60% per year is 60% per year, whether it is volatile or not. The difference is that volatility allows MicroStrategy to go from a market capitalization of 1 billion to 100 billion because other people are afraid to do what we are doing. If it were not volatile, Bill Gates, Warren Buffett, and Charlie Munger would probably have bought it all, and I would not be here today. Additional explanation about volatility and leveraging. Bitcoin's volatility is a key characteristic that makes it unique. Volatility is not a problem, but an opportunity. Investors who can embrace this volatility have a great competitive advantage. Volatility is a characteristic that allows investors to experience extreme emotions, but those who can remain calm and not sell in moments of panic are the real winners. Volatility is also a characteristic that allows Bitcoin to attract the boldest and most strategic investors. If Bitcoin were completely stable and predictable, it would probably have been absorbed by large investors like Bill Gates, Warren Buffett, and Charlie Munger, who would probably have bought it all and left little room for others. Instead, volatility creates a barrier to entry for these more conservative investors, allowing smaller and more strategic investors like MicroStrategy to seize opportunities. Volatility is also a characteristic that allows Bitcoin to act as a kind of safe haven for investors. When traditional markets become destabilized, investors seek refuge in safe and stable assets, such as Bitcoin. This generates additional demand and, consequently, an increase in the price of Bitcoin. Bitcoin's volatility is a characteristic that reflects the disruptive and revolutionary nature of the technology behind Bitcoin. Bitcoin is an innovation that has changed the way we think about money, property, and trust. Volatility is simply a manifestation of this disruptive nature. Bitcoin's volatility isn't a drawback, but a characteristic to be leveraged. While the emotional swings can feel intense, like experiencing 100 financial quarters of anxiety in just days, those who hold through the volatility ultimately benefit. Volatility isn't a bug, it's a feature, and embracing it gives investors an advantage. For long-term investors, Bitcoin is best viewed as a tool for capital preservation. It's suitable for funds you won't need for at least 4 years, ideally 10 or more. Investing short-term capital in Bitcoin is highly risky. Enduring volatility is key. Those who remain calm and don't panic sell are the real winners. In 2024, the SEC recognized Bitcoin as a commodity, and by 2025, mark-to-market accounting became mandatory. This milestone opened the doors for global financial institutions to handle Bitcoin without restrictions, resolving an 80-year stagnation where traditional assets like real estate and even treasury bonds lagged in liquidity and returns. Satoshi Nakamoto's digital commodity took 15 years to gain acceptance, finally being recognized as legitimate by governments and banks by 2025. Imagine wealthy families across 47 countries distrustful of traditional banking and currencies. If a perfectly secure, immutable, decentralized currency existed, a god coin, they'd flock to it. Since that's not divinely offered, Bitcoin emerged as the programmer-created solution, a secure, decentralized network eliminating reliance on banks or governments. This network operates by having each user run banking software, with each version verifying others, expelling cheaters, and ensuring stability through decentralized verification. Security is further enhanced by using electricity to generate trillions of hashes, making the system virtually unhackable. Bitcoin's value arises from several factors: weakening fiat currencies in unstable economies, its digital nature enabling near-instantaneous trillion-dollar transfers globally, and representing digital capital in cyberspace, immune to real-world entropy and chaos. It offers speed, intelligence, and cost-effectiveness far beyond traditional systems. Bitcoin's consistent 60% annual growth over the past 8 years, while volatile, creates opportunity. A smooth, predictable rise would mean major institutions would dominate. Volatility scares away less sophisticated investors, allowing strategic players like MicroStrategy to capitalize. Understanding the fundamental reasons for capital flow from insecure to secure assets, from physical to digital, is crucial. Bitcoin's volatile appreciation, driven by fear-based sell-offs, is advantageous for those who understand its long-term value. Bitcoin's returns have consistently outperformed bonds and the S&P 500. Even if future returns stabilize at S&P 500 levels, it remains a superior alternative to bonds. For public companies, recapitalizing in Bitcoin instead of USD can be capital attracting. Outperforming the S&P 500 attracts investment. Underperforming repels it. MicroStrategy's growth from a $1 billion to $100 billion market cap demonstrates how volatility can be leveraged. Without volatility, larger, more traditional investors might have cornered the Bitcoin market. Ultimately, Bitcoin solves distrust in traditional finance and combats inflation. It's a secure, fast, and efficient digital asset, valued for its ability to transcend physical limitations and resist devaluation. Embrace the volatility and the future of finance that Bitcoin represents.